Hello, this is Patrick White from AA Commodities and Investments of Spencer, Iowa, with your Tuesday, May 7th edition of the Market Recap. So as you can see here, we had a moderately bullish day for the grains, which was nice. We saw a little bit of reprieve here. Let's go ahead and start it off with a disclaimer. Just remember that everything that I say here is not a trade recommendation. If you'd like to read the full disclaimer, please pause the video now. All right, so as you can see here, we had July corn up 2 1/4 at 366.5. July soybeans up 1/2 cent at 8.30 3/4, and we had July Chicago wheat up 2 1/4 at 439.5. So let's go ahead and jump into the charts real quick here. Let's go ahead and talk about July corn here. We had a pretty eventful open on Sunday night there, just with the trade headline of the U.S. and China not getting a lot of headway on their negotiations, and the possibility of them raising tariffs here this Friday. So we'll see what happens in respect to that. But by and large here last week, we had a pretty good short covering week. That news gapped the market down, but what happened? The hedge funds and stuff, they still want to cover their short positions here just due to the wet weather. So that's why we're seeing such a bullish reaction from that gap down there. So and they gapped it right at the 366 mark, which has been pretty good resistance. And you can kind of see the 366 level over here was some good support here last April. So touched the 366 level. I think that 370 to 371 area is probably going to give us some trouble here in corn. We might see it test a couple of times, and then if we can get back above there, I think the 373 to 375 area, 375 for sure, it's going to be a pretty pivotal moment for the July corn contract there. So, but yeah, overall corn, it's filled the gap and stuff. I think we're going to be range bound between 370 and probably the low 360s before the WASD on Friday. So on to July soybeans here. Just really pretty tough week in the soybean market here. Just took the brunt of all that trade war news. So they have not filled their gap yet. We at one point we're down 25 cents here just to start the week here. And in July beans, I guess I've got some good support in there at 825. Resistance is going to be the top of that gap level at 840. We just haven't been able to retrace those losses, just like the corn market has. The soybean market has not been able to. It's just had a lot of added pressure just with meal. People are concerned about the meal demand for ASF, the African swine fever. So meal has been leading this thing lower. Soybean oil really hasn't been gaining a whole lot though either. So even the products are really struggling here. So I would look for the 840 level. If we could get above that and we could hold above that and maybe challenge 850 and get above there, we'd be talking a totally different story. But right now, there's just no turnaround. Could this be a bottom, though? Definitely could be. We'll just have to wait and see if it confirms. I guess what a lot of guys would be looking at would be these lows here. This is a weekly nearby chart. And so the lows in here was like the 810 to 813 level, and that's right where we're at today. So a lot of people would be looking at that June, July, and September of last year chart, just as a reference there, because that was a big low there as well. So going on into July, Chicago wheat here. Really just in a downward trend here, but it looks a lot like corn here. We gapped down, filled that gap pretty easily here in the wheat market, and now we're looking for higher ground here. This is being led by the world markets and things. The U.S. wheat, the SRW, which is Chicago wheat, soft red winter wheat, that has been too wet and stuff. The Mississippi River Delta has been too wet. They've been getting more rains here this week, so that's been giving us a little bit of bullishness. But that by and large, we haven't had a crazy bullish atmosphere for the wheat market. So I think this thing is probably going to ping between that 445 level. And 430 before the WASD on Friday. So we really don't, unlike the world wheat perspective, we really don't have a huge bullish story for the wheat market. But definitely like in the former Soviet Union and in Russia and parts of Europe, they've been dry. So if they start to miss a lot of rains and stuff, this thing could come alive. But at this point, it's not. So I think we're just range bound again between the 444 to 446 level on the top end of July wheat, and the low 430s. June live cattle, yeah, as you can see, it's been really tough couple of weeks for that contract. The spec community was extremely long this thing, and it's just been, they've just been running out of their longs here and into looking at a short position here. But I guess we've got resistance up here at the 1530, the 115.30 to 115 level. I'd say is good resistance. We've got some support in here at 1230, and then the 111 mark. So I guess, yeah, just the speculators have just been running this thing. They're just getting out of their longs, and it's just everybody, they just can't get out fast enough, and they're just running themselves over, it looks like here. I guess I don't really see, a whole lot of bullishness. We're still definitely in a downtrend. I guess if we got back above this 115 level, I'd be a lot more excited about it. But, we need to start seeing some positive closes and closes near the highs. So, yeah, as far as 112.30 is my area of support. And then it goes down to 111, which corresponds with these two highs over here in June and July. And the hog market. Kind of interesting here. We've had a nice, decent slide down in here into support. I've been looking at the 88.30 level to the 87 level. And that's done a pretty good job of holding here as of late. Today, we did take that out. We got to close above that. Yesterday we had the lock limit lower down day. There was no trade outside of that price range of the $3 down there at 89.75. And that is just because of the reaction from the issues that we've been having with the trade deal in China. So I guess the market is not. It's kind of tough here because the Chinese still need pork, but they're probably not gonna get a whole lot of pork from us at this time. So that's why the market's pretty scared at this time. There's just a lot more added volatility to this thing. It's already volatile, but yeah, we've done a good job of hanging on in here. At least we didn't have another lock limit lower day. So it looks like the 87 level is pretty important here. 87 into 88. If we were to close below the 87 level, I think this thing's in trouble. We'd probably go down to the 84 area. Just eyeballing it there. So that's about all I got here, guys. If you guys need a little bit of extra help, I do have a daily grain marketing newsletter that I send out, each trading day, and it's got information, just about cash grain, advantage alerts, things like that. You can go ahead and sign up for that at aa-commodities.com. Click on newsletter and just put your information in at the bottom right there. So, hope you guys get a lot of work done today, and we'll see you next week. Thanks.